Often there's a misconception that getting a mortgage as a self-employed borrower is a difficult process. If you work with a loan officer that knows what they're doing and you've done the proper preparation, it really can be a smooth process. So today we're going to talk about 5 tips you can do to make this a smooth and easy process in getting a mortgage as a self-employed borrower. My name's Miles Pitcher. I own Superior Lending. I've been in business for 22 years. So first of all, there are some basics, and you probably know that typically you need to have been in business for 2 years, self-employed, to be able to qualify. There are a few exceptions. So if you've been in business for 1 year, that 1 to 2 year range, chat with me and I can share with you the exceptions and how we may be able to get you into a home. The next one is that if you own less than 25% of the business, you are not considered self-employed. You're considered an employee of the business, meaning you probably receive a W-2 for your work. That's what we use in calculating income. We don't treat you as the self-employed borrower. Hey, if you can do me a favor real quick, would you click on that subscribe button for me and hit like? If you find my info, my videos helpful for you, do me the favor. That would be awesome. All right, let's jump into these 5 tips to make this process smooth and easy. So first of all, get your taxes, get your paperwork all in order. So that means if you're doing your taxes, get them done, filed, and get the amount either you're getting refunded or owed taken care of. If you are extending, that's okay. Just provide the copy of the extension to your loan officer. But I've given you here a list of some of the documents we need. We need personal and business returns for the last 2 years. We will also need you to prepare a year-to-date profit and loss. And if you're not used to preparing those profit and losses, just work with your loan officer. We have a format, we have a simple profit and loss that we can provide you that you can use to help put that together. And then also bank statements for 2 months. We need those. Now, if you have been in business for over 5+ years, self-employed for 5+ years, make sure you mention that to your loan officer. The reason being is that there are times when we are allowed to use just 1 year of tax returns and qualifying rather than 2 years. And one of those instances is when you've been in business for 5+ years, and we can document that with the tax returns. So don't forget to mention that point. Also, just be careful on your write-offs that you do. I fully understand that being self-employed, we want to pay as little in income tax as possible. Therefore, a lot of times people get very aggressive in writing off deductions, expenses. Well, when you do that, that can hurt your ability to qualify for a mortgage. So just be careful with that. I do have an alternative that I'll show you at the end on tip number 5 on how to be able to get a mortgage, even if you are writing off a lot of expenses against your income. Tip number 2. So many times you, as a business owner, you will take on some debt, let's say like a car loan that you have to qualify for personally, but it's for a business use vehicle. And in that case, what happens is, yes, you have to, that loan's going to show on your personal credit, but I need you to pay every single month for that car loan or the payment out of your business account. Why is that? Because if I can show 12 months of that expense being paid out of your business account, then I get to exclude that debt out of your debt ratios, which will help you qualify for more home or just really make it possible to get the loan done for you. Credit cards, oftentimes I see people using credit cards for businesses. That's okay if it's in your name personally, just have it paid for out of your business account. Same with cars that are out of the business. Make sure those expenses are paid out of business accounts. And make sure that you have the full 12 months, no interruptions, to be able to exclude those out of your debt ratios. Don't be surprised if the loan officer says, hey, show me a statement showing the 12 months of those payments. Number 3. So oftentimes I run into clients who write out earnest money or plan on using down payment funds out of their business account to buy their home. This can cause some problems because from the underwriter's viewpoint, they're saying, is the withdrawal of those funds out of the business account going to be detrimental to the business? And they may ask for a CPA to write a letter that says this is not detrimental. So I highly encourage you to use personal funds when you write your earnest money and do your down payment. And that also means that as early as possible, hopefully even 2 months early, you can move those funds out of the business into your personal account and let them be there and let them season in your personal account. All right, number 4, one-time expenses. So if you had last year some really heavy-duty one-time expenses, maybe a piece of equipment or something that happened that will not happen again, and we can document that it was a one-time expense, I'm able to take that write-off that you had for that expense and add it back into your income. And so think about that in your expenses. Be prepared to document it. It's a great way of being able to add income back into your taxes for qualifying. Depreciation very much works the same way. We get to add back in the depreciation that shows on your tax returns towards your income. Number 5. So this tip is for my friends who do write off a whole lot, but they make great money. For some reason, I have landscapers who use this quite a bit. But what it is a bank statement loan. And the underwriter will look at the bank statements, look at all the deposits coming in, 12 to 24 months of bank statements. They'll total up all the deposits, and then they take a percentage of that, and they use that to count as your income. And they can do this on personal or business bank accounts. And so with that, then we can help the client get a loan. Now, the interest rate will be slightly higher on this loan, but it's a great way for my client. I had one who only showed $10,000 of income on their taxes, but they said, I'd rather pay a little bit higher interest rate on my mortgage than to pay thousands and thousands of dollars in income taxes. So the bank statement loan is a really cool way for my self-employed borrowers if they don't want to show the income on their taxes. I'll post a link to a video that I've done on bank statement loans. There are a few other loans out there that we call non-QM, non-qualified mortgage loans, and they're really cool. For example, if I did one for a client who only had 1 year of self-employment, we did this non-qualified mortgage loan for them. Again, the rates are a little bit higher, but a really cool way for the clients to get into a loan. Again, my name is Miles Pitcher. I own Superior Lending. Please feel free to reach out with any questions, scenarios. My team is here to help you, all 50 states. Have a great week. We'll come back to you with another video soon.